Hi, and welcome to the 2020 Recession Survival Channel Guide. My name is Tony, your host. Well, it seems that everything that we look at is pointing toward news looks to be good. Unemployment is at an all-time low, 50-year low, and it looks like wages have been picking up in the corporate hiring sector and investment sector looks to be picking up. However, things are not always as they appear to be. According to a Bloomberg.com report, U.S. recession chances hit 27% within the next 12 months. Recession fears have been growing amid a persistent trade war with China, as we've seen a pullback in corporate hiring and the manufacturing sector that's already slipped into contraction. The economy, the world economy that is cooling down at a rapid pace. But the big question is whether the U.S. economy will cool down as well and slip into something much darker than a recession, but a depression. Well, with our odds being at 27% right now, according to Bloomberg economists and other economists, we're now entering which would be in 2020, the 11th year of the economic expansion. Can you believe that? Since 2008 and the 2009 crisis. So with that much expansion going on, we know that this has been propped up by corporate buybacks, stock corporate buybacks, and companies buying back their own shares, and also by a lot of funny money and investment money overseas that's been propping up the U.S. economy. So the U.S. economy, of course, is the sickest child in the hospital. It will sustain this recession a little bit better than the worldwide. Other people in the worldwide that's going to be affected by this worldwide slowdown. But what's going to kill the U.S. economy is that the consumer. Yes, the one dark horse in this whole economic puzzle is the consumer. The consumer data and retail data has been weakening. CNBC, MSNBC, and others have been reporting that the consumer, before they had said in September and in August, they had said that the consumer was strong. But now consumer spending is weakening, and as we go into the holiday season here, after next week, things are looking much more bleak. Consumers are cutting back on heavy purchases. They may be day-to-day purchases, but the consumer is cutting back. Well, why is the consumer cutting back on purchases? Because wage growth has not been there in the last 35 to 40 years in America. Okay? So, with wages adjusted for inflation, wages have only been growing at 2%. Inflation, meanwhile, is burning at a 5 to 6% clip. And this is something that they're not telling you in the reports that come in the media. Okay? So, demand for labor has dropped. The good news is the GM situation, the strike situation in Michigan, as you recall, in Flint, Michigan, that has been resolved. They've gone back to work, but now there's a Chicago Teachers Union strike going on in the labor union as well. So we're seeing signs of stress and strain in a lot of labor markets, even though we have a officially quote-unquote low unemployment. And by the way, once we get at full employment, which we're at, there's only one way to go from there, and that is down. Okay, as companies look to cut costs because profitability is declined, companies are going to cut people with benefits and those with seniority first, and then work their way down. So don't be surprised to see after the holiday season, as we head into January, the New Year, don't be surprised to see more banks laying off. As they try to maximize their bottom line. Don't be surprised to see more of these startup technology companies such as Uber, Lyft, put some of the other ones, Pinterest, some of these other recently IPO companies, Beyond Meat, etc. Don't be surprised to see them start laying off more workers to try to increase their bottom line, because remember now, they're not profitable. They're just getting a lot of investor money from these big banks. Okay, a lot of them are not profitable. They don't have to be. They're just getting the valuations up so they can get ready to cash out. Now thankfully the WeWork model has been taken on by SoftBank. As you saw in the news, SoftBank has agreed to make a financial package for them on their IPO, as they were struggling in so much debt. So This is how our 2020 is shaping up, and this is before the presidential election or anything else, okay? Any as a dark horse event. Bloomberg economist is forecasting that the U.S. economy will only grow by 2%. Now, that number is so important because in the past, the global GDP has been at 3.5% or above that, okay? So with the U.S. economy only growing at 2% in 2020, that's still considered growth, okay? You know, we have to get to 0% and below that for them to officially, quote unquote, declare that we are in recession territory. But it looks as if things are already heading that way because that 2% figure is the slowest annual rate of growth since Trump was elected, and it keeps getting revised down. We went from a 3.5% number when Trump gave all those tax corporate cuts and everything that, you know, propped up this economy in the beginning. Now we're down to 2%, and that's getting even lower. It seems like that is following. That's ironic because that's following the trend of the Federal Reserve, who's cutting interest rates down below 2%. As you know, we're expecting a rate cut at the end of this week of 25 basis points, another 25 basis point rate cut at the end of this month, and some are even expecting another rate cut at the end of December. Okay. That will put us close to 1.75%, I believe, or 1.8%, somewhere around there before the end of the year. So there's only so many cuts left, only so many tools in the arsenal that the Federal Reserve has. But the U.S. recovery has already been the longest period of continuous economic growth since 1854. Let that sink in. So the odds may favor another year of growth, but no one's betting the farm on it, trust me. So, and that's not counting this trade war. Like I said, they met and they said we've got phase one. How many phases of this trade war we're going to see? This looks like a long-term play by both China and the United States. And I told you before, I corrected predictably, along with others, that the Brexit deal would be extended, and which they have done. They have extended the Brexit deal and the terms and stipulations with that as well. So don't be surprised to see that as well. So basically what we're looking at is that most of the major players and most of the moves that we'll be making, even though we're having a slowing global economy, for the U.S., the time period between April 2020 and November 2020 will be absolutely critical during next year when the earnings season comes up, when all the cuts have been made and the Fed can no longer cut the interest rate below 1% or 0%. And when all of the monetary stimulus in terms of tax cuts for the rich and all of that are weighed out, now we're going to see what we're really looking at. That's what we're really looking at right here. The IMF, International Monetary Fund, expects a little bit of stronger growth in 2020 because they believe that the emerging markets, such as, the BRIC countries, that is Brazil, India, Russia, will do better than they did in 2019. But I'm going to give you a little caveat. You know that, as you know, Brazil has not had unrest, but the countries around it, such as Bolivia, La Paz, Bolivia, they're in civil unrest. And we know we just had the situation in Venezuela. So that's going to help to downgrade Brazil's chances. India is going through a banking crisis right now, so I don't know what the IMF is thinking about that. A lot of the banks in India, you can only have a $200, $250 withdrawal limit, and some of the banks were seizing customers' assets. So in Russia, well, who knows? They're a wild card, okay, in terms of emerging markets. This is what the IMF predicts. They predict global gross domestic product be up by 0.8% or $700 billion by the end of 2020. But with Trump slapping tariffs on $360 billion of Chinese goods, that's more than half of China's total exports to the U.S., and only about 2.5% of China's economy and a total small fraction of the world trade. How is that tariffs is going to affect the rest of the developing emerging nations, because China sends stuff to other countries other than the United States, goods and services, that is. So that's where the uncertainty comes in. I do not think that this economy is going to be growing, yes, because the rich is going to get their money out of here quickly and in a hurry. But with $23 trillion debt that the United States has, it's just too much to overcome. And like I said, I'm going to put this out there in the caveat. We are moving toward a digital monetary system. So they want all of the paper cash, the money supply to shrink. They want all of the paper cash to be gone in a few years because paper cash is just too cumbersome. It's not easy. It's harder to track. It's, to see money laundering and all that kind of stuff. So we're moving toward a digital system of currency. I'm not saying it's cryptocurrency. I'm not saying it's anything like that, but that's what we're moving towards. Paper dollars, paper cash is going to be a thing of the past, okay? Because governments want more control. They want more access to your finances, and they can easily, instead of printing up storing houses of coins and billions of dollars of bills and these print storehouses, they can just digitally hit a button and then, of course, wipe out our accounts. And so here at the 2020 Economic Survival Guide channel, we encourage you to definitely keep cash on hand outside of the banks, because you do need cash on hand when the ATMs go down. The fires in California, PG&E, that's Pacific Gas and Electric, they were shutting power down to people whose neighborhoods were not affected by the fire. So we had over 200,000 people without power. Now, when you don't have power, you can't get access to the ATMs. You can't get access to other goods and services, okay? So if you don't have cash on hand, you can't just run to the bank and get, so cash will be king in the beginning until they switch over. So I encourage you to save whatever you can, even if it's $20, $50 a month after bills are paid and after your subsistence is taken care of with your family. Save that cash and have cash on hand under your mattress or under your safe, wherever you keep it at, outside of the banking system, okay? Because cash will be king in the beginning, regardless of what people say. When we go into this deflationary depression, okay, after the 2020 has sorted itself out, after 2020, you're going to need to have cash on hand, probably for the first 6 months to a year, until after they sort out the new system that they're going to bring in that's going to be all digital, okay? That's what we're heading towards. So that's just a little heads up. Now, for those people that say we need to manage our finances now, what can we do now? That's true. Keep your money outside of the stock market, because the stock market is going to be crashing. Warren Buffett is his company is sitting on $100 billion of cash because they know this. That's why they're buying back their own stock. All the big companies are buying back their own stock. They're investing little because they know that the yield curve is inverted. They know that real wages have not increased in the last 40 years. They know that bonds, they know that treasury yields are low, and they know that savers are being punished in this economy because they can't get any interest on their money. So that is what we're working at. We'll likely avoid a recession in 2020, but if the world economy is going down, eventually America is going to go down too, because you can't grow when other countries are on negative interest rates and your own country has a bunch of debt and doesn't produce anything. We're not producing anything in the last 30 years. There's no more steel mills. There's no more car mills. All that's been moved to Mexico, Canada, all kinds of other countries because of the NAFTA trade agreement that was signed by Bill Clinton in 96. That's already been gone. Okay. And the technology revolution that America and a lot of these other countries are experiencing is not going to be enough to lift us out of this depression or recession. Most likely, the only two options that we have after this 2020 thing is either to go to war in the Middle East somewhere again, World War III, and involve Russia or Iran or something like that to help get us on track, or they're gonna have to do a financial global reset and go to a digital currency, because everyone is just too much trillions. Every country is just too far trillions in debt. Maybe a combination of those things, But my bet right now is on that they probably won't do the war thing because we just don't have enough money to even sustain that. So it'll probably be a global reset of the currency, in which they don't do debt forgiveness like Canada did of some credit cards, but they will have some type of program in place before they go into the digital currency. Okay, now whatever happens here, Europe is already being affected. Turkey and Argentina is also going to be big to watch in the next coming months. In the next 3 months, we have to really pay attention to what's going on down in Turkey and Argentina. Turkey's in a currency crisis. And in addition to all the skirmishes they've had there, Argentina's definitely in a currency crisis. They're in a recession, might even be in a depression sooner or later. So watch out what's going on there. Don't get distracted by all these things that are going on. If you can, try to get some heirloom seeds and think about growing your own food. Even if you live in an apartment, get some things on the patio, get some spices, get some potatoes, grow some things you can grow on your own, so you don't have to depend on that, because half of our food comes from other countries. And so, it's no telling what they would do to our food or whatever, or water, whatever, because all of our stuff comes from other countries. So try to get yourself more self-sufficient. The more self-sufficient you are, the more you don't have to depend on the system when things go down. You can at least be self-sufficient for a week or a month until you can get back on your feet. But if you have nothing, if you're not preparing, if you just think that we're going to avoid recession and that's it, we're just going to always be going up, 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 it's just not possible. Even if we're at the lowest unemployment rate, even if we at the greatest growth, the stock market could be, remember in Venezuela, the stock market was at 30, 50,000, 100,000. It didn't matter. The people were begging in the streets for a loaf of bread that cost 50 something dollars in American dollars. Okay. So, you can have a stock market going to infinity and have the real economy going to nothing, to shreds. Okay. And that's just the delusion that we live in, the illusion of the system. And so, Jerome Powell and the central and the federal banks have been trying to do all they can, the Federal Reserve, but eventually, every time that they've cut down things, the interest rates, and they didn't raise them, bad things have happened, okay? And every recession and every depression is different, okay? And I'm going to talk about in the future, I'm going to talk about not only survival ways that we can survive this or try to survive this, it's going to be something like we've never seen before, but I'm going to talk about that, and I'm also going to talk about ways that we can help each other as a community, try to get about a sense of community. In the last depression, we've had that sense of community of all people, all neighborhoods, but this one's going to be different because we've all gotten so comfortable with all this material stuff, computers, TVs, phones, all this stuff that we've gotten comfortable with that they didn't have back in the 1920s and 30s. So you look at this now, and this interest rate is going to be at 1.75% or even lower next year, okay, with all the cuts that the Federal Reserve is doing. That's just going to absolutely murder the banks. They can't make any money making loans on that kind of stuff, mortgages and all that kind of stuff, unless the money is being printed at an infinitesimally rate, at a super rate, you know what I mean? So we're going to have to get prepared for this, and we know that something is coming. It's not all roses and peaches and roses or peaches and cream. Even if we do avoid recession in 2020, it's just a temporary bumper, because after the elections, whether Trump gets reelected or somebody else comes in there, that's another chance for them to run up the debt and to send this thing spiraling downward, because every country needs a stimulus plan right now besides China, because China, the economy is still growing at a faster pace. Their economy is growing at about 5.8%, which is lower, but it's still growing at a very good clip, okay? Every other country besides them is going to need a stimulus plan. Russia, United States, the UK, Greece, Turkey, Argentina, Brazil, Venezuela, you name it. Everybody else is below global GDP growth rates. You can hear that from the IMF. You can hear that from the Federal Reserve. Any other analyst will tell you that. And matter of fact, all the other countries are in negative interest rates besides the United States and Sweden and a few other little countries that are barely hanging on to interest rates above 2% or 1%. So, my friends, I encourage you to continue to prepare, continue to get prepped, save your money, save your coins. Don't take that trip this Christmas, buy modest gifts, because cash is going to be king. The deflationary depression or recession is coming. There's going to be stuff on sale, but you're going to have to need cash on hand to be able to survive this initial phase of the transition to digital global money. Thank you very much. If you have any questions or comments, please leave them below. I'll be sure to answer them and get back with you. I thank you for your support, and have a blessed weekend. Bye-bye.